This video is a Bybit trading tutorial. We're going to go through the spot market right here, how to actually place orders, what the different order types are, how to analyze these charts, how to make some drawings on them, and then how to buy and sell from crypto to fiat or from fiat to crypto. I'll leave timestamps below for all of the different sections in this video. So this is the Bybit trading screen. We're going to go through this. If you don't have an account yet, just sign up for one. This is the Bybit main page. I'll leave a link to them below. They have trading and deposit bonuses all the time. You can check out the details there. I think you can get up to 30K if you're trading futures. In the spot market, they might have some incentives as well. Just sign up for an account with an email address. Now, you do need KYC on Bybit these days. This is just very simply an ID card or a passport. You can just upload it when signing up for an account, and that is going to give you access to trading on Bybit. As I said, link in description. You can sign up for an account. I'll also leave some beginner's guides to Bybit down in the description as well that go through the entire setup process, so check those if you want. Before trading in the spot market, let's quickly go through the different types of accounts you will trade with on Bybit, because they split up your funds depending on what assets that you have. So if you do have an account, you can come to assets, top right here, you can just choose assets and then go to either a funding account or a unified trading account. What is a funding account? Funding account is where you place your assets when you're not trading them. And the reason for this is because Bybit is bringing on many services like, to pay for things, and the Bybit card as well. And so you can actually use crypto as an asset that you can use to actually spend through the card in the future if that's available for you. Now, fiat currency right here as well, if we click this, if you are depositing fiat onto the platform, it is going to be in here, and you can see that in your funding account, either crypto and fiat. What is unified trading? Unified trading is your trading account. So what you can do is transfer assets from your funding account into your trading account when you want to actually go ahead and trade them in the spot market. So you can do that right up here. You can see trade and transfer. So if you have some assets in your funding account, just click transfer on them, and then this comes up, and you can internally transfer from your funding or your unified trading back and forth. So when you want to trade, make sure you have some assets in your unified trading account, then you can go ahead and trade them. We'll go through an overview of the spot trading market on Bybit then, and there's really a few bits of information that are important. The first one is, what trading pair are you trading? So everything with crypto, or when you're buying any asset, you're selling one thing to buy another. That's just the basis of what we're doing. So if you have a fiat currency like euros, which is supported for trading with USDT, or if you have USDT itself, you can trade that against everything. So first thing here, just choose the asset that you want to trade. So if I type in ETH, we can see all of the trading pairs with ETH, ETH against Tether, ETH against USDC, ETH against Bitcoin. So it'd be selling Bitcoin to buy ETH there. In fact, it doesn't really matter which way around, because as we can see, buy, sell here. So you just want to make sure that you have the trading pair that you want. One of these has to be the asset that you want to buy. If I choose ADA, you can see all of these pairs. If I choose SOL, you can see all of these pairs. So as you can see, most people will trade the crypto assets versus a US dollar stable coin like Tether or USDC. So that has good support there. You can also add favorites just with the stars right here. Now, as of right now, you can see USDC actually has 0 fees. I don't know how long that's going to last, but if you do have USD coin, then you might be paying basically 0 fees on trading that as of right now. And you can see Bitcoin pairs and so on. So that's the pair that you're trading. Now I'm going to click ETH. You can see the chart change, of course, because the chart of each trading pair is very different. So we have that right here. Up in the top left, you can see the trading pair that you have. So we have ETH, which is the base currency, and it's quoted in US dollars. So the base currency here, and quoted in US dollars. That's the quote currency on the right-hand side. Now, this is important because when we talk about the price of an asset, what we're really saying is how many dollars does it take to buy 1 unit of the base currency? So 1 ETH, 1 unit of ETH, how many dollars does it take to buy 1 full unit of ETH, which is 1 coin? It takes at the moment $1,897. Now, of course, you can buy any fraction of that 1 coin. You don't need to buy 1 coin. You can buy half a coin, 0.0876 of a coin. It doesn't matter, right? Because it's crypto, you can trade any decimal of that. So all we do is quote 1 coin in price. So we know that each coin is $18.97, but of course we can trade a tenth or anything else. And so the actual dollar amount that we're spending is anything that we want. So as you can see up here, just some information. We have the price of the asset where it's trading, the 24-hour change, the highs and lows over the 24 hours, not really that important. So you can just have a look at these, if you want, but there's not really too much information there. Now we have the order book right here. What is the order book? The order book is the book of orders. So all of the market participants that are showing the market their orders, what they want to do, that is right here. So you have buyers and sellers in any market. Down here in green are buyers. And so they are showing the market their bids. They are saying, hey, I am a buyer of, and what we can see here is we can see the price that they want to pay or that they're willing to bid. We can see the amount in total. So these amounts might be one buyer or scores of buyers or hundreds of buyers. The amount of ETH that is being bid for at each individual price is shown right here. So you can see that it says quantity in ETH and then the total ETH. So the quantity of ETH being bid for at this price is quite high, and that's just flipped off. So what we can see really is this doesn't really matter too much because it changes all of the time in terms of the amount of ETH being offered out. But buyers down here are saying, I'm willing to buy ETH at this price. Sellers are saying, I'm willing to sell at this price. And wherever a buyer and a seller meet in the middle, that is the mid price, and that is the actual price that is traded. And that's this one here. So you can see that 1898 is actually the price that ETH last traded for. If we look at recent trades, you can see all of these here. So you can see the price that it was traded at and the volume. And that's the order book, which will bounce around continually throughout the day as buyers and sellers, come to try and meet in the middle. Now, down here on the left, you have your current orders and your order history as well. And we'll look at how that changes when we're entering orders. You might want to change around the chart if it doesn't look a lot like mine, or at least know the differences between the different types of charts. So if you come to this icon right here, you can use different types of charts. You can use a line chart if you want, which just simply tracks the current price and then the closing price for each day of the asset that you're looking at. This doesn't give the trader any information. This is more for long-term stuff. So what we're going to do is change this over to a candlestick. You can use hollow candles. It's exactly the same. It's just a design difference. I'm going to use candles here. What is a candlestick? It gives us 4 bits of information for a time period. It gives us an opening price and then a high and a low price between the time frame that you're looking at, and then a close price. So that's important for traders to understand what's happening within a time frame. So when you look at a line chart, you have absolutely no information about what happened during that day. You just know that it closed at 1977, and that's it. During a day, though, obviously the price can move. So if you look at candles, you can see what happened here during the day is actually the price went up. The reason, what we'll see is during this green candle here, is the candle is green, so I know that the day finished up. So it opened at a specific level and closed at a higher level. It was an up day. The price moved up that day, and so that's why it's green. And I can see that essentially it just started at 1868 and finished at around 1988. So that's the price we can see on the right-hand side, and it was an up day. That's important to know during that time frame that price action occurred, and then the next day basically it just gave up all of that price action. But that gives us a lot more information than just a line chart. So an open price at some point, and then the candle will essentially track the price movement during that day. So let's say the price gets to here during the day, but then the price actually closes a little bit below that. That's how a candle is drawn. So as you can see, these wicks, the high price for this candle, this red candle, was actually up here. You can see the wick was drawn there, but the candle closed all the way down here. The reason I know that it closed there is because the candle is red. So I know the opening price was here. The price went up to this point and actually closed down at this level because it's a red candle. So I know that. So it's just giving us price information of any specific time frame. What are time frames? You can change the time frame for each candlestick. This is going to be dependent on how long you're looking at in terms of when you want to trade. So most traders will just look at the day charts right here. This is a normal chart to look at. If you're looking at longer term trends, you might want to look at week charts. What is a week chart? Well, that means that each candlestick now is 1 week in length. So rather than looking at a day, you're looking at a week. This is much longer term, and so the candles will be different. In a day, the candles can look fairly volatile, but actually the price movement may not be that large. If you're looking at a week candlestick, Each one is a week, so you know how much the price has moved over that week. And you may see smaller movements in the candles, but over longer time frames, obviously they can move a lot higher. Now, if you're looking at 30-minute charts or 15-minute charts, you're really looking at, day trading or intraday trading here. And so you can see a lot more volatility in the price and up and down. So it depends what you're trading at. If you're trading in the spot market, assuming you're buying and holding, probably looking at, 1 hour, 4 hour, 1 day, 1 week charts like this. When you actually come to trade, I would suggest looking at, day and week charts, and then down maybe to the 1 or 4 hour when you're actually trading, so that you can maybe put in some better orders and get some better fills for your orders than just kind of, buying at market, as we say. And I'll come onto that in the section in a second. But time frames are important. 1 minute's not going to give you really much information about what's happening, but you want to use these ones 1 week and 1 day if you're looking at longer term trends. And then when you're actually trading, you might just want to flip down to the lower time frame charts. There are some drawing tools to be aware of. Bybit uses TradingView. They import the TradingView charts into their system. TradingView is completely free. I would recommend using TradingView. You just can sign up with an email address. I'll leave a link to them below. It's free to use and is great software in terms of analyzing and charting any asset. Bybit give you this for free in TradingView here anyway. So click this TradingView chart on the left hand side. You can see some drawing tools. So the brush right here, you can make circles or do other sorts of freehand drawing. If you click the box here, you can use maybe highlighters or rectangles. So if you click a rectangle and you have a price range that you want to just box out, you can do that. Now, what I would also highlight is the trend line tool. So the trend line here, if you just click it, you basically have to start a trend line at a point and then connect it to another point. So if you're looking at using a trend line here, what you'd be doing is connecting points that are within some sort of trend. How to draw a trend line? What we need to do when drawing any trend line is connecting points, the extreme points. So let's say we want to draw an uptrend here, because this chart is definitely pointing upwards, right? So what we can do is look for an extreme point. Now I'm going to click this one here. If you're on Apple, you can press Command. If you press Command, it's going to, you can see the magnet flipping on and off here. That essentially, puts the cursor at the bar chart where it is. So if I press Command here, it's going to click it on, and that is actually directly on the candlestick. On PC, I'm sure there's a shortcut as well, but I don't know it. So what we can see here is that this trend, as I've drawn it here, doesn't really work out, because you can't violate the chart like this drawing trends. It's kind of, you can't really do that. So if I drew that, you might say, well, that's a kind of a trend, and it does kind of work out, but not really, right? Because you've kind of violated the chart a couple of times here. So usually what we would do with drawing trends is draw a trend line on a part of the chart that actually makes sense, where you can connect up the actual chart itself. So I'm just going to press Command here again, maybe on this one, press this, and then what we want to do is connect this and not violate the chart. So that actually draws quite well, as you can see. So I've just drawn a trend line here, a kind of uptrend. So what you're looking at when you're trading is the price going to come down to this uptrend and then bounce again? That would obviously be an uptrend. And if it doesn't, then it might break through. And you can use those kind of trends to actually trade at a later date. Other drawing tools that might help you is the position size tool. So obviously, if you click this, we have a lot of different trend lines, and you can look for yourself there. I won't go into those. But we have this right here. If we click this out, we have the position size tool, which I use a lot. Long positions and short positions. If you're trading in the spot market, you're going to be going long. So you can just press this, and it gives you an idea of the price movements to expect based on your analysis. So if I just click here at the current price, click this, it's going to give me an analysis of, if the price moves to a certain level, what is the risk of loss and what's the percentage that I'm winning or losing, right? So if you're opening a position here, let's say you want to buy some Bitcoin here, and you say to yourself, the chart was previously here. So what if it goes down here to this level? What would that loss look like? You can just very easily work that out here. So you can just drag this down and say, well, if the price falls to this level, I know that that's a 13% loss. I'm comfortable with that, no problem. And then if you say, well, actually, if we zoom out, I think the price might get back to this level again, and that would be a 20% gain. So That works a lot more with shorter term trading. I have way more videos on that. I'll leave some of them below in terms of futures trading, day trading, and strategies like that. This is a good tool though, so I just want to highlight it in this video. If you do want to know more about trading and certain strategies and really a professional look at how to trade, that's what the Crypto Investor course is for. I will link it below. You can see the trading section here. It goes through in minute detail about, you know, how to actually trade and place orders. You can see me trading live. Some of the things I think about, you know, how to identify trends, different trading strategies for day trading, and using all of the different tools. You can see down here as well, we have a day trading guide as well with futures. So if you want to learn more about really trading like a pro, I'll just leave the Crypto Investor course linked down in the description. Another key thing to learn when trading is how to spot support and resistance levels. If you are trading, you may just want to dollar cost average into Bitcoin and just buy $100 a week, whatever you want. But also we can analyze the charts here with support and resistance. What is support and resistance? It's just price levels where the price gets to and then gets rejected from. And those are important price levels for traders. So what we're going to do is click a horizontal ray, and then we're going to search for areas on the chart where the price has been rejected from many times. So what we can see here is that this price level seems to be a level where traders kind of fought a battle, and you know, that's an important price level. So that's important for me. A second time that we see a price level get rejected is here. And then a third time is actually currently when we're seeing a huge battle between buyers and sellers where the price isn't really moving a lot. That just happens to be at the exact same price level. That's obviously an important price level for the price of Bitcoin in this case, because we're looking at BTC. That's an important level because on 3 separate occasions, more than a year apart, traders have battled at that price. If we actually zoom out a little bit more, you can see here as well, they actually did it as well. So there was a sell-off and then a bounce. This price level is important. So what I'm going to do is click my horizontal ray, and I'm going to just click once because a horizontal ray will draw that for you, and then that's it. Now what I can do is get rid of these drawings if I want, and we now have a support and resistance line on our chart. Support and resistance is very key because we now know that the price that Bitcoin is trading at is pretty much at a very key level. Now prices will get rejected from this at some point, depending on if you're in a bull or bear market and fundamental analysis, which we can't go through in this video. But we know as a trader that at 30K, we're either going to reject off this and go down to the next level, or we're going to bounce off this and go up to the next level. And so where are those levels again? Again, we can just choose support and resistance lines. So you can see this as a key level here. We have a rejection, and then to the downside, we have an rejection. So resistance, resistance, support, key level here. So I just want to click that. Then to the upside, we can see again, somewhere around here, right? So you had a sell-off and a rejection, a sell-off and a rejection, and a kind of battle here that eventually fell through. So somewhere around here is probably another key level, right? And so we can look at around to the chart on the right-hand side and say, that's around 36K. I would say 35K just as a round number. So we can put that there. So now we have 3 price levels on the chart that we're looking at where the price could go to. Now, fundamentals and news flow are going to change this, but at least we as a trader now know some price levels where we can trade, and we might want to put more of our assets towards. If you're dollar cost averaging, not too much difference, but at least it's something that we can look at to give us some price levels. Let's look at buying crypto then. I'm going to use a market order first. A market order first is like when you go into a shop and you just say, I want to buy this thing, and they tell you what the price is. So you don't choose the price, you don't choose anything about the trade except for how much that you want to spend. So on the right hand side, we can look for spot here. So we're trading in the spot market. That is, you are buying the actual crypto yourself, and you can withdraw it from the platform if you want. So spot, buy, and then market here. A market order is simply just telling the system, I want to buy this much, and you are just going to get a price. So you can use the slider here if you have an amount of assets on the platform, easy enough like this, or you can just choose an amount here. So I'm going to choose a dollar amount, $25 or something like that. And you can see it shows you how much of the assets that you have in your trading account right now that you're going to spend. So what we're actually doing here, we are telling the system, I want to spend $10 And what it's going to do is it's going to go to the market and it's going to get the best price it can for you, which is this one right here. So you are taking someone else's liquidity. They have shown their order to the market. They are a seller at 29,977.39. Because they've shown their order to you and you are taking their liquidity with a market order, that's what you're going to pay. You can't pay down here because you're taking their liquidity. That's what's known as being a taker. And so there are different trading fees for makers and takers. Makers of liquidity, people that put in limit orders, may get slightly lower fees on occasion. Makers may pay slightly higher fees on occasion. It depends on the system. But market here, the difference is almost, you can't really see the difference in trading fees anyway. But we're going to have a market order for $10 and we're going to pay this much here. So I'm going to buy BTC. I'm going to press yes. And that's traded instantly for me. You can see, can't see at the bottom, but it says order traded successfully. Come to your trade history. We can see down here, I have a Bitcoin US dollar spot trade. The order type was market order. I bought $9.98. So obviously that $10 I paid, 2 cents in commission here. Field price is $29,977.39. So that was this one right here because that seller was there showing his price and I took his price. So I bought that $10 of BTC. The other way to trade is using limit orders. Limit orders let you choose the price that you trade at. So we're going to buy again, but we're not going to take this guy's price. So what we're going to do is press limit. Now you can see we can choose two things. The first is the amount that you want to trade in dollar terms or in BTC terms. And the second is the order price. So we can choose the price that we tell the system we want to trade at. So what I'm going to do here is choose 29,950. And I want to buy $10 worth. You can see the order value. I can put $10 worth here and it works it out now. It knows the exact quantity that I want to buy because, it's 29,950 and the order value is 10. So I'm buying 0.000333 BTC. What happens when I put this order in? I am putting my order into the system now. So I'm telling the system, I want to buy Bitcoin, but the most I'm willing to pay is 29,950. So will it actually trade at this level? No, it won't, because the market is 29,970. So that there are people above me that are willing to pay more than me. And so I can't possibly trade below them because sellers would take their price and not mine. So now if I'd put that 29,950 in, I would have actually traded because sellers came in and forced the price down to 29,949. So my limit price would have gone through then at 29,950 because I was a buyer at that level. So just to show you, I'm going to put 28,500 as a price that I want to trade at. Same amount, I'm going to put $10 worth. And what we're going to do is buy BTC at this level. So 28,500, press buy BTC. Order price is 28,500, the quantity and the order value, press buy BTC. What you can see is my limit order has gone in the system and it's just waiting there. My limit price is 28,500. I'm not going to pay a single cent above that. The market price is $1,500 above my price. So I cannot trade at this price. However, my order is down here on the order book somewhere and the system is saying your order's in and it's first come, first serve at that price. So if the market does get down there, you will buy at that price. So that is the price that I'm going to pay. So we can leave that order on there just to work. It's good till cancelled, meaning it's just going to be there until you cancel it. That money that you've put in this order value is now tied up in that order. So you can't take it out or use it anywhere else. I'm going to cancel this order here on the right hand side and that limit order is cancelled. Now what happens if I put a limit order in and I put the limit order in at 30,000 and I put the order value at 10? It's going to input this order for me. My instruction to the system is buy $10 worth of BTC and I'm willing to pay 30,000 per Bitcoin. The price now is 29,938. What it's actually going to do is trade immediately because I'm saying buy immediately as long as the price is 30K or below. So the system is going to say, yep, great. The price is actually below your order, your limit order, and I'm going to buy it straight away. So limit orders, you can put any price you want in. If the price is better or at your order level, you will trade. If it's worse than that, it will just go down here and it will be working for you in the system. The next type of order we can use is a conditional order. You might see it as a trigger order on different systems. Conditional order here, you can click this. There's a TPSL option and a conditional option. These are actually both exactly the same thing, so I don't know why there's two differences here. But just press conditional here, and we can see the difference with the order type because we have trigger price right now. What is a conditional order? So we know that limit and market orders are different, and we can input them into the system. But when you are using limit and market orders, you're putting them into the trading system immediately. So you're telling the system, do this immediately right now, and then you're telling it the order details. With a conditional order, what you're saying is, I'm going to use either a limit or a market order, but I only want to input that order when a specific price is triggered. And so you may think, why do you want to do this? It's good for what's known as stop losses. So you can actually put in a trade at a price of your choosing, which may otherwise be traded using a limit order, and you don't want to do that. So as an example here, I'm going to sell some Bitcoin and I want to put a stop loss in. So I'm putting an order in where I'm actually losing money. Because remember, I bought some Bitcoin around this price, 29,900. So I don't want to lose too much. So if I put in a stop loss order, what I really want to say is if I bought around here and the price gets down below this support level, I want to stop any further losses, right? I don't want to get out of the position. I actually want to take a loss. I want to sell at a loss, but I want to prevent any further losses if it goes down further. Many reasons why traders do that. Well, you can't use a limit order for that. The reason is if I want to sell Bitcoin at this price to stop any further losses, that price is around, let's say 24,000. If you put a limit order in right now and say sell Bitcoin at 24,000, it's going to sell it immediately because what you're saying is immediately sell Bitcoin as long as the price is 24 or better, the price is 29. That's not what you want to do. You don't want to sell straight away. So you want to put in a conditional order where you're actually saying at 24,000, sell my BTC at 24,000. That would sell your BTC at a loss, the stuff I just bought at 29,000, but that is what I want for the order, right? I'm telling it, sell at 24 if it gets to 24. And that is a stop loss order because you're only selling if it gets down there. And if it doesn't, then you're staying with your position. So you can't use a limit order for that, but you can use a conditional order for that. That's to the downside. To the upside, if you say I bought at 29 and I want to sell at 35, you don't need a conditional order for that. You can just use a limit order because what you're saying is sell at 35. The price is now 29, so it won't sell until it gets there. So conditional orders work if you are doing something where it's outside the price and it would trade immediately for you and you actually don't want that to happen. So you could do it on the buy side as well with a conditional. If you put in a limit order and said, I want to buy Bitcoin when it reaches 35, it's going to trade immediately for you because the price is 29. So you put a conditional order in here and say at 35K, buy Bitcoin at market, whatever the price is, and the order value $15, whatever. So why would you want to do that? Well, it's more of a breakout trade, right? So, if something really good happens with Bitcoin and it shoots up, you may want to put a conditional order in where you're actually buying higher on that good news in attempt, kind of a breakout trade. You're thinking it's going much higher. So there's reasons for the conditional order. It lets you put in both limit and market orders, but only at a specific trigger price. So it doesn't go in immediately. It only inputs the order for you when that trigger price is met. There are many other types of trading on Bybit as well. For example, trading bots. You can see that here. It's very easy to get to. You can have the trading bot just here. You can also go to tools, I believe, and you have trading bots. There's also copy trading. Not going to go through that in this video. I have videos specifically on this. I'll leave them linked in the description. You can see derivatives as well. Many day traders use this. It is a bit more risky for sure, so I'll leave some specific examples on that. Also as well, you can actually use on-chain futures trading as well. So Apex DEX, it's actually a decentralized exchange where you can take some funds and put it on-chain, so you don't need to put your funds with a centralized exchange. It's basically a Bybit version of that just on chain instead of centralized. Again, I'll leave that tutorial down in the description as well. Check the Crypto Investor course if you want way more in-depth and professional trading videos, link below, and also the Bybit deposit bonus if you are trading anyway. Might as well check it out. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.